I want you to be the best trader you can be. I want you to be the most efficient trader you can be. So I'm going to give you a quick lesson on the SPY and the movements we're seeing today so that going forward, you understand when to buy your call options, when to sell your call options, when to buy your put options, and when to sell your put options. So let's talk about the SPY's movement for today, which was Wednesday. All right, if you saw my pre-market video, what did I say? I said every time it spikes, we're buying puts. Whether you want to buy puts on the SPY, whether you want to buy puts on Amazon or Tesla or something to that extent, a big name that will move significantly with the market. So I've outlined what we saw today's movements. We started at 407, that's what we closed at. So we opened at 404, down to 402, etc., etc. Now the key points, which I speak about all the time to Discord on 349 Trading, as well as Twitter, is 408, and it's every 4 points down, which is 1 full percent. So 408, key levels, 404, 400, 396, 392. So I'm going to explain how these key levels are going to help you and how you're going to figure it out. And yes, if they go under 392, you'd be 388 on the SPY. So here's how you play the SPY. When we were at 403 this morning, I said it's likely we're going to go to 400. We might bounce off 400 and go higher, but let's wait to watch out. So that was around 10 a.m. this morning. I said if we break under 400, we will touch 396, and that was my belief. And we've already touched 396 as I shoot this. So around 400, if you're thinking about buying calls in your stock and the SPY or the market's going to go down to 396 because I'm telling you that, then you're paying too much. If you're buying puts, then yes, you get in at the right time. This morning I gave out the alert for Zillow, right? Z. I made a video about it. I actually like this stock. However, it was up this morning too fast, too quick. So it went to $43.80, and I said, puts, let's buy puts. 10 contracts, another 10 contracts. It then dropped $2. I sold, but I didn't sell for the max profit. I sold a little early. As soon as I sold, 5-minute rule, it dropped. Now, how come I didn't use my strategy? The SPY was trading at 398 when I sold. And I already told everybody that if the SPY's at 398, it was definitely going down to 396. So I'm still not sure why I sold. I did so to secure profit. I took in 48%. I would have taken in about 90-something%. With that said, at 398, I told everybody, you could definitely see a bounce off 396. So we're currently at that point right now. But this is true for any day. Understand, if we broke lower, so you saw 395 hypothetically, it's likely that it would go down towards 394 or even 392. So when you bounce off a level like this, it's likely to go back up and find some resistance at 400. So when you're buying call options, let's say you're a fan of Lucid or Tesla, and the SPY is at 396 flat, and you say to yourself, it's likely to bounce, and even if it doesn't go back to 400, it's likely to bounce higher. Let me buy my call options now for Tesla, Lucid, PayPal, Square, whatever you want to do. The same is true if you see it break under and it goes to 395, you say to yourself, I know it sounds like I'm chasing, but let me buy my puts on the QQQ or Amazon or Netflix or Tesla, and then if it breaks 395, you'll likely see 392. So this might be a good lesson for tomorrow, because tomorrow's day, Thursday. I'm not sure where we close at today. I can give you my guess. My guess is we'd probably bounce off here. We'd probably hover in the 398 range. Maybe it would go back to 399 before we drop, and I think we'll see 396 again. With that said, going into tomorrow or Thursday, as you watch this video, the new levels of the SPY, again, will be 400 on the top, then go down 4 points, 396, 392, 388. Now, when will we see the bottom? Well, we'll probably have to have another bad day like today. So I am so glad that I was able to give my Discord good guidance today, because I see how sickly the markets look. Tech is off 400 points. The Dow is off 700 points. I bet the UVXY is spiking like mad. But I want everybody to understand this lesson on the SPY. So let's do one more lesson while I have everybody here. We know the markets open at 9:30. Then you have 10:30, 11, 15, and so on and so forth. Why are these important? Because if you're trading options between 9:30 and 10:30, The spread between the bid, is what someone's willing to pay, and the ask, which is what someone's willing to sell it at, is too wide. Later in the day, it might be 5 or 10 cents. In the morning, you might see 60 cents on the bid side and $1.20 on the ask side. So when you middle it and you pay $90 a contract, 30 minutes later, even if you're correct, it might be like 65 cents and 70 cents, and you could still be down 18%. So that's lesson number one. That's why I like to wait till the market settles at 10:30, unless I'm 100% sure I'm going to be right about the trade. Then, the next important time, at 10:15, if the market is shitty or the market is green, it usually either gets better or worse by 10:50 a.m. So if the market's having a bad day like it was today, where we spiked off open and then at 10:15 you saw we were already negative, I told everybody it's likely to get worse. And what happened? It got worse. Next, another key time is around 11:15. Why? Because I like to tell people around 11:15 there's generally a fake out. So if you see the market do like this and get worse and it's 11:15 and you see a rebound, do not get fooled. Don't be like, I've got to buy call options right here, because what's likely to happen is it's likely to get worse. The same is true if the market is strong any given day. Let's say the Fed comes out and they say we're only due 25 basis points and the market reacts positively. Around 11:15, you might see a sell-off, and then it's a fake out because it'll get stronger. So again, right now we are in a bear market. We just had a bull run. I dropped a video the other day that said bull run in a bear market, and I explained why. It's called short covering. So if you don't understand short covering, please join me in that video as well.